Howdy, everybody. We are here today with Robert Garcia, who is the CPA guy. Robert, how are you?
I'm doing well, Gilbert. Thank you for having me.
Thank you for joining us. Now, tell me a little bit about your brand. You're trying to be more approachable. Accountants, like lawyers, are often seen in these starched businesses. So tell us about the CPA guy brand.
Yeah, I've been a CPA for almost 12, 15 years, something like that, lose track. And so we were just working, all credit to my wife. She came up with, everybody has a guy. So what about I have a CPA guy? And we launched it and we worked it in and we put a lot of effort into the community and making sure that it was really who we were. And what we found is that, people resonated with it, felt more approachable, right? A lot of times people are like, CPAs are, too professional, too high cost, right? I mean, they don't deal with certain things. And, we built that brand to just make sure, right, that people have a guy, whether you're a client of ours or we're just a community advocate on your behalf.
And you said, that you put in the work. And I think some people think like, I'm going to chat GPT this, put this in Canva, come up with my brand, and bam. Like you had to have searched for that brand, right? Like, and I know right before we started recording, you're like, how many people or accountants named Robert Garcia in San Antonio? And I said, maybe 2. But I mean, like, what was the work that you went in to put into it and that you're trying to refine?
Well, I'll draw back to how I was raised, how I grew up, right? I grew up with a big family, 8 brothers and sisters, right? Okay. I had a few trials and tribulations along the way. And my philosophy is I want to be the person to believe in those that need someone to believe in, right? Sure. So that has always been us, right? So we really try to focus on the small business community. I'm on the board of the Hispanic Chamber of Commerce. And so I love what we do in terms of our mission and that focus. And so when it came to putting in the work, it was one of the things that we recognized was there wasn't a lot of CPAs, if any, out in these small business spaces. Perfect example, we talked about SA to DC. Right. Yep. So, that was a space that I joined right through the Hispanic Chamber. And I found that, there weren't any CPAs to talk tax planning, tax policy. So that's, for us, that's the work that we did. We always want to serve the underserved. Mm-hmm. I worked in corporate America. Corporate America serves a place, right? They contribute. But so do our small businesses. And I think we often forget what they contribute and they're not as highlighted, right, as prominently because they don't write the $100,000 check or they don't have a $1.5 million development coming downtown. Yeah. But they're very much part of the ecosystem in terms of the employers and things like that. And I think things are like that's where we have always focused. And because of that, we are a small business champion.
And, I think associations, right, like which is what we are, brings together a collective voice for all the small businesses, which most of our members are, right? Like most of our members are either one agent brokerages or 1 to 5, right? There's a few of those mega ones, but they make a small part of it. But I love that you said that we need to do more to look out for the small businesses because they are absolutely vital to our community. So, awesome. Thank you for that random segue because we came to talk about accounting. And you were here last year, and I think we had you here sometime in the first quarter of the year. But this time we figured, all right, let's get this information out a little bit sooner as people are preparing. So in general terms, like you have a client that you had a client, and now you have 15,000 people who are going to listen and take you as a client, right? What are you going to tell them they should be doing right now as the year is wrapping up? What's going to be your advice to them?
First thing I'd probably say is rest and recovery, right? It's been a hell of a year. Right?
Yeah. Okay, fair enough.
Number 2, it is, you got to get your books in order. You got to get your accounting in order, right? And that might be working with your CPA. That might be just downloading your Excel files, right, from your bank and putting them together. We're getting ready for the holidays and people are going to forget it, and then bam, January is going to come around. So the first thing that I tell everybody is that you just want to make sure that you get everything in order because everything after what I'm about to say is going to follow, and it has to come from a place of, the strong financials at the end of the day.
What is books in order, right? Like to me, you're like, okay, checking account, I'm done. Yeah. Like that, I'm guessing you need more than that.
So from a sophisticated standpoint, right, you might have a small brokerage firm that has the QuickBooks Online or some sort of accounting software, right? So you want to make sure that you have everything classified, everything entered, bills, invoices, right? It doesn't have to be collected, but you want to make sure that everything is, and you've accounted for everything, right, up through this time frame. A lot of times what we see is we're just really busy scaling, growing, dealing with other things. And so, the last time I touched it was August. Right? We're 3 months out, right? You can't make decisions, but we do. You might be growing, cash in the bank looks good. So from an accounting sophistication standpoint, that's what that means. Let's get all that caught up. Let's classify it. Let's put it where it belongs. Let's question everything. And let's just make sure we have now a summary of all the activity that we have transacted up through this date.
What percentage of your clients though come to you with a shoebox of receipts?
Every referral comes with a shoebox of some sort, even a digital sort of shoebox, right?
It's like, here you go. That's what. Now, I mean, does that contemplate deductions as well? Like, because at the end of the year when it's time for taxes, I go online. Don't judge me.
Yeah, judging away.
Fair enough. And I'm like, what are the deductions? Like, oh, okay. Should I, let me see if I can do that. Now, what I do is I collect all those things and then I take them to the CPA and I was like, hey, do these work? And they're like, absolutely not. So at some point I'm like, you know what? Never mind. I mean, is there a strategy to stay organized? Because I know for me, I get to August and I'm like, okay, I'll catch up in January. Is there any recommendation you give to people on that?
Yeah, work with us. Okay. That's going to be the first one.
I think Why is that? Because you're going to walk it. Hey, you need to be doing this. You need to be doing this.
Yeah, I think from a traditional sense, right? When people think, bookkeeping, right? We're CPAs, and when people think bookkeeping, it's putting, classifying your transaction, both income, expense, into the right bucket and presenting a financial statement. What we have found is that we really excel in not just presenting you numbers, but educating you on what they mean and how to use them. That's the biggest issue right now that I see with small business owners, right? You might be widely successful, but you're not really looking and understanding your numbers, right? As to why. So when we talk about deductions or tax planning or any of those kinds of things, it always boils down to where are you? And if you don't know where you're at, we don't know where to go.
Mm-hmm. Okay. So what is the one thing you often find that they don't put in that shoebox? Like, are we talking receipts? Are we talking mileage? Is it they ended up buying a car and they didn't put that in there? And we're talking about small businesses, sure, right? Like, this is the agent who out there on their own, just doing their own thing. Like, what is it that you often find like, hey, where's all this stuff? This could have helped you with that planning and helped you give you that direction of where to go.
The number one issue the number one miss is mileage.
Okay.
Right. Being real strict with using an app like Mile IQ or something like that, right?
Because they are strict, or you're saying not using it strict enough?
Because they're not using it strict enough.
Okay.
Right.
So like, I kind of went this many miles on that trip and that kind of thing.
Yeah, they throw an estimate, right? They don't really, start and stop it when they're going.
Is that going to get you dinged? Like, oh, I can't trust these records because the IRS, if I audit you, is like, I can't.
There's always a percentage of audit, right?
Okay.
I think if I'm being honest, the IRS is in complete disarray right now, right? And so, they were already a reduction in the audit as a whole.
Oh, the views of our guests do not represent those of the entire. Keep going.
That's the attorney in him.
Yeah,
that's the attorney.
Absolutely.
He felt uncomfortable. He had
disclaimer.
Disclaimer.
Yeah, that's my job, right? But
enough.
no, okay. So, but they're not doing the mileage correctly, right? So,
from a compliance standpoint, you have to have documentation, right? You know, not everything as a small business owner or as an independent realtor is a write-off. And we often think everything is because lunch, right? Dinner, happy hours with friends, right? We're talking business. Look, I mean, there's a lot of flexibility around those things, gray areas and whatnot. But we're strong financial, strong compliance. You want to have documentation and support and processes, right? The processes are what going to get you to scale and grow, right? That's that education that I talk about. So if you don't have those and you're winging it and we're always coming to the table and we're fine with whatever we're deducting or the estimates, sure, there's always a risk of audit, but you're really risking your future more than it is anything else because you don't really know where you're at, right? With some of these things, you can't bring on another realtor in your brokerage and understand what the total expense is going to be for them and their commission structure and those kinds of things, right?
Yeah, like even the assistant, right? Like, oh man, I'm overworked. I need to hire an assistant. But then you can help them then, or a CPA guy can help them say, look, you're not going to be able to do that based on this information on what you're bringing in and what you're taking out. But you can't do that if you're not keeping a record and if I have nothing to.
Yeah, if you're back, dated back to August, you're missing mileage. And then the other part is that, look, tax compliance has always created anxiety in everybody.
Yeah.
The number one question or, response that we get, and we try to educate, right, as much as we can. I just don't want to go to jail, right? I just don't want to go to jail. And I don't want to.
Do you know anybody who's like, yeah, I'm cool. Let's go.
Sometimes, or they say, I just don't want to pay a lot. And as right, in the, real estate industry, right, you write everything off, then you're not bankable. Right. And so those are things that we have to educate on. Right. And so with that, we have to make sure that people understand where they are. And so getting caught up staying caught up, and then being able to review that information in terms of, well, where are you trying to go? Do you only want to be by yourself and you're totally fine with that? That strategy is very different than at the end of 5 years, I want to be 20 broker or 20 realtors in, right, in a brokerage and things like that.
Got it.
So, yeah.
So I like that. Process helps you scale and grow. So what are the processes you've seen? So when I'm thinking about mileage, like what is the app that you recommend people use? What is the platform or other app or whatever to keep track of your dinners, or I'm having a client appreciation event? Like what are the one technologies that you recommend people use to help with that?
I mean, from a mileage standpoint, Mile IQ, right, is one of the more predominantly ones out there. You know, if you're using a QuickBooks or a self-employed, right, they might have the mileage app on there as well. There's a few other apps. You know, we try to be careful with the recommendations that we provide because it's not for everybody. There's always a cost too, right?
Fair.
You mentioned the tech bro, right? You know, there's always a cost of something. We want to be mindful of where are you in terms of what technologies you want to implement, because that cost will add up. No different than our subscriptions, right? Hulu and YouTube and everything else.
Which is way more than cable now.
Which is way more than cable.
I cut the cord and somehow or another I have
because it feels okay at $9 and another $9, right? So we're very aware of that with that small business owner, right? So there's a lot of opportunity, a lot of apps out there that can help you. I think it's just a matter of where are you and where do you want to go, right?
Is there one that is one subscription that allows you to multiple functions?
No, I mean, with accounting, it's always been challenging because we're talking about, you know, forecasting, we're talking about process improvement, we're talking about basic accounting and financials, and we're talking about tax compliance, right? Those things don't really integrate. There's not a one fit solution, right? So we're dealing with multiple solutions as a whole, and even more so, right, with small businesses, right? If you're dealing with marketing, you got a marketing app, like you mentioned, Canva and all these other ones, right, that you're putting together. So from an accounting standpoint, QuickBooks is kind of the lead right now, sort of the monopoly, right? They literally are a monopoly. And then you do have like Xero, FreshBooks, Zoho. There's a number of other small and up and coming ones that Wave is another one. You just, you know, whatever suits you best. We typically only work with QuickBooks. That's our expertise. And we try not to go outside the bounds of learning something new as of right now where we're at.
For like just finishing up on preparing for the year end, anything about 1099 or estimated tax payments that people need to be aware of?
Yeah, and this is really kind of the key issues, right, of where I wanted to come in and just chat, right, with your members is that, look, accounting is important, right? And so sometimes, you know, there's reasons why we don't get caught up on things, but 1099s are also a compliance thing. And I think we forget. We bring the photographer, we bring the landscaper, right? We bring the repair person, right? The staging, all of those are 1099 worthy, depending on the type of structure that they have. But there's services that we're being provided to you. Okay. And we just, you know, that's another sort of major red flag when we get to the end of the year, we're doing a tax return. You're like, hey, and it's a question on the tax return. Did you file your 1099s? Most of the time we'll get a no, right? And so we have to say no. And so they run the risk of either losing that deduction or having to file those 1099s. So that's one. And then when it comes to estimated tax payments, again, you got to know where you're at, where you're going, right? So oftentimes, like realtors, just like us, professional services, there's not a lot of capital assets, right, and heavy expenses. So we are going to most of the time generate a profit, even if it doesn't feel like we generated a profit. So we do want to make sure that we understand what that profit looks like and what that estimated tax payment will look like so that you're paying into the system, you avoid penalties. And again, the anxiety I talk about. You get to tax time, you've already paid in, right? You're not going to write a big check at the end of the year or anything like that because you've been doing your due diligence down, you know, each quarter of the year.
Somebody's hearing this podcast and they're like, "Oh my goodness, I have not paid in."
Me. Yeah.
Or they haven't done it. What would you tell them? Like, look, this is what you need to do before the end of the year. I mean, what do you tell your client who comes in and asks you? Like, yeah, I haven't been doing that actually.
Yeah, you know, we try to send out communication as much as we can. Yeah. I can't. It's a service we offer, right? But again, we're not pushy on the sales. So if you don't want it, you don't get it. But then we're also not liable, right? At the end of the day, we have our own disclaimers in there, but I try to be as simple as I possibly can. You're not trying to push a sale on anybody. We just want to help support and educate, right? This is a small business underserved space that we're in. Number one, you can look at your prior year tax return. You can, if you had a liability last year, you can say, you know, you can pay up to 90% of last year's taxes this year. And you can, the next quarter, Q4 was coming up in January 15th. And you can start planning for there. You might still have a penalty for the other 3 quarters, but that at least puts you in a good place. Now, you might not have the entire amount. Pay what you can.
Okay. Now, accelerated expenses. Tell me a little bit about those.
Yeah, so, we get the question all the time, hey, it's the end of the year. What can I write off, right? What can I do to minimize my taxes? Again, multifaceted, right? Do we want to minimize your taxes if you're trying to buy a house next year? Maybe not.
Okay.
Right? Got to have revenue, right? You got to have profit to ensure that you can be bankable and stuff, right? So, but there are opportunities where we say, look, we have conferences that are coming up. So we talk about accelerating expenses, things that we can purchase today that it won't happen until next year. So conferences, travel, right? Dues, subscriptions, things like that, right? That we might be able to accelerate now. Sometimes contractors cost, right? If there's projects that we're working on, we can go ahead and pay them up front. It may not necessarily net thousands in savings, but it's just opportunities that we try to teach so that people are aware, right? And this really bridges the gap of, again, what to do with the information that you have so that they're better planning, right? They're planning their travel schedules, conference schedules around these things because now they know better versus, hey, I got to the end of the year and I didn't do any of that stuff. I didn't know.
Because the idea is if you're going to do these expenses, you're able to kind of
there's some planning opportunities in there, yeah. But the other thing too, just real quick, is if you don't have the cash, don't do it. Right?
Don't do it just because.
Don't do
it's
it
not
just
going to save you that much.
Correct. Yeah.
Okay.
Yeah. You always have to make sure cash is king, right? It's really important. So just kind of know where you're at before you're just trying to expend your money to maybe save a few. And I'll frame it this way, right? So 10% of $100 is $10, or it's 10 cents for every dollar.
Okay.
Right. So think about what you're going to expend. Sometimes it really makes a difference because you're at that tax bracket that you might be moving down a bracket and might be a big savings. Otherwise, you might just be spending to save 10 cents, and $4,000 is $400.
What's the return on that? And is it worth the effort?
Yeah.
Now, but what is the one thing you often find that either people don't take advantage of that, or they bring it to you and like, hey, look, I bought this mastermind class. And you're like, yeah, actually, that doesn't count. Like both of those?
For the most part, small businesses, they always want to find that unique, right, sort of tax write-off. Most everything right now that we spend on as small businesses is going to qualify for a deduction.
Okay.
There might be a few things like political contributions and things like that don't, right? Entertainment's a big one that, they can't be deducted, right, since the 2017, TCJA. But most everything else is they're going to spend the money in the place that's trying to help them make money.
What is the definition of entertainment?
Yeah, like, sports tickets,
okay,
right? Box seats, things like that, right? So they've been... Dinners or meals, right? So that's totally fine.
Totally
yeah, a show, right? A Vegas show, or dinner and a show. It's the dinner, not the show, right? If you can break that out.
So I can take you to the lunch, but if I take you to the movies, the movies
Majestic
don't count.
Theater or whatever. Yeah, now that's, this is where we get a little bit creative, right? It's like, well, is that, a sponsorship? Right? Or is that something that you're donating, right, in part of a raffle or something like that, right? Then you can be a little bit more creative and still be able to write those off.
Okay. Is there any advice that you usually give people? And I mean, is it too late for this question and advice though? But when they're setting themselves up as a corporation, whether LLC, they don't have any of that. They do set themselves up as an S Corp or whatever it might be. Yeah. Like, what do you tell folks?
Well, the number one thing, the S Corp conversion, right? LLC to S Corp conversion, especially for solopreneurs, right? And the service industry, is always, it's a selling point. So very marketable tool for people,
right.
For the CPAs. The biggest component is a tax saving strategy around an S Corp.
Okay.
Right. So there's self-employment tax that's 15%, right? And so as an S Corp, you forego that, right? As a Schedule C, you're hit with that 15% and then whatever your federal rate is. So that's when we talk about 30% as a sort of benchmark for tax estimates, right? 15% self-employment, you're basically the employer under a Schedule C, and then whatever your federal rate is. As an S Corp, you forego the 15%, but it is a requirement that you have a salary, reasonable compensation. So that just depends. I won't get too much into that because it gets a little technical and it's variable, right? It's research-based and things. A lot of times, right, people don't know the salary component or refuse to do the salary component. But doing the salary component, it's a higher tax return now, right? You have a tax return that you have to do. It's a business tax return, so it's more expensive. You have to have payroll compliance now, so there's additional cost. So you have to weigh the cost savings or the tax savings to the additional cost that you're incurring by moving. Plus, it's a much more robust sort of compliance, right? If you decide that you don't want to do this anymore, there's a cost to wind it all down.
Not an accountant.
Yeah.
Okay. So my first thing though, when you said salary, is this means I get paid exactly this. I pay myself exactly this amount every month, every 2 weeks, or whatever it might be. that's kind of hard in a business that goes up and down, right? Like, so is that, but if in order to qualify a salary, does it have to be the same at every pay period?
No, that's a really good question, right? We're so used to working for a corporation where that's how we do it, right?
Because I would be like, this doesn't apply to me because I'm never going to be able to do that.
Yeah, we get that question a lot. It depends, in particular, right, in spaces that there's seasonality, right, or cycles and things like that. What we usually recommend is, again, it has to be a reasonable salary. You can't make $300,000 and pay yourself $10,000, right, and distribute, right? So those things, it happens, right? I'm sure.
There's a reason people said I just don't want to go to jail. Because they try that. Yeah.
There's that reason. So as a business owner, you have full control over your HR, your payroll, right? And so what I usually recommend is that we identify what our averages are, right? What we expect, right? Based on looking at prior years. And then we say, well, based on prior years, this is where I think we should be. Let's set it there. If you have a more successful month or quarter, we can always bonus you out a little bit more, take a distribution. If things go down, we're still in line with what our estimate is, or we can reduce the payroll at that time. So you have full control on being able to do that, right? You're basically the decision maker.
But the number is at the end of the year. It's not necessarily going to be every month you had to get the same amount.
No, and in fact, we recommend that you're on a sequence because it just helps
as best as possible. Because then it's more corporate, right?
100%.
Like true salary. Got it.
And then you have better averages, forecasting, all those kinds of things, right? But you can also run quarterly payroll, right? If you have it, you run the quarterly payroll at that time. Some people, and even I don't recommend it, but some people will run the end of the year payroll and just run one lump sum. And, kind of work the numbers the best way that they do there and just pay the taxes and things at that time. They don't have to pay the salary. But
I'm guessing you don't recommend that because it's really hard to average when it's a one-time payment.
Yeah, there's a lot of implications around it, right? Just cash flow and things like that, right? It just doesn't really lend itself. And I think when you're dealing with a small business owner, you also, one of the things that we teach is the financial leadership side of it, right? And so you really have to coach people into just like this question, how do we even do that? Are we even allowed to do that?
Right.
You do have to coach them, right? And so structure is their best friend. Processes is their best friend. So if we're reacting and doing things, ad hoc, it doesn't lend itself, right, to creating structures for themselves to, better allow them to succeed in the way that we really want them to succeed.
You've kind of mentioned it a couple of times as far as like, let's just say the small business owner wants to buy a house, or I'm going to ask you, like, is there any other plans in that, right? Like buy a house, invest in something. But do these have greater implications, or does it make it harder to achieve those things? I would assume if I'm trying to buy a house, it's always been harder to show your income, right? Mm-hmm. When is having an S corp or one of those make it easier and to get financing? Maybe that's not a question for the CPA. Maybe it's for the mortgage guy. But I was just curious.
Yeah, so one of the things that I think always makes it easier is having clear structure.
Okay.
Right. So when you're not an LLC, it's harder, right, to determine whether you're really truly operating as a small business. When you're an S corp, right, there is a perceived investment into truly wanting to run a business, right? I don't think both of them in any mortgage rate that I've been a part of is that you have to present both the S corp and the personal return together, right, and proof of income and those things. So they're all part of the package that you provide, right? Mm-hmm. Now, I personally believe, right, and I not necessarily talk to a mortgage lender on it, but, working with the CPA, having that structure, in place lends itself to the validity of the work that you're doing, and it makes it a lot easier to move forward in the process.
Makes sense.
Yeah.
So timing, are they too late for 2025 to set these things up or convert from an LLC to an S corp? Or is this something at this point they should start planning for in 2026 for 2027?
Yeah, I think it's you have to do the analysis behind it. You have to really make sure. So rule of thumb, and this is again the sales tool, right? But rule of thumb is that you want to be at least $100,000 in profit to convert to an S corp. Okay. Right? Your tax savings benefits are there; they justify it, right, over multiple years. I've seen people now push that number down to 75. Again, it's for us. It's not about the sale. It's really making sure, does this make the right sense and right move for you? At the end of the year right now, no, it's not too late, but with the IRS and the government shutdown, right, we have to, apply, right, for the S corp and those things, and there might be a delay, or we may not necessarily get, the approval for this year. It might be next year. But we can still do some things this year if people feel like, hey, there's an opportunity there for me. Otherwise, which we're happy to help, right, clients, analyze and review where they're at. 2026, the start of 2026. And you don't have to make that decision until March 15th. So you still have some time within the next year, right, to kind of determine, once you're getting your tax return done, your financials ready to go, there you might go like, wow, I'm over 100 and I anticipate continuing to be over 100. Let's make that move.
Okay. But so for 2025, when I file in 2026, it's still not too late.
No, it's still not too late. We have a couple of months. As I mentioned, doing the salary, right? We could literally make the conversion, run the payroll right at the end of the year and be in compliance and be good.
Okay. Good. Well, I'm glad we're asking now, not like we did last year at the beginning of the year. So one of the things that I always hear about, though, is paying your kids. Now, I heard it's really good for them because it sets them up with a credit score and everything like that. But is that really a good strategy for business? Like having employees that are employees?
Yeah, it's a great strategy. It really is. There are some technical components, right? Looking at it from an S Corp, they do have to be on payroll. Where you're a Schedule C LLC, they don't have to be on payroll. So there's a lower compliance level around the two. But absolutely, I mean, if you have, 12-year-old, 13, 14-year-old, right? And some kids are coding and doing marketing and doing phenomenal things these days. At
social media advisor, for sure.
Yeah,
right?
I mean, social media is the easy one, right? But there's a lot of things. I know my kids are, in their school that they're going to, they're learning tech apps, so they're learning Google Sheets and things like that. And, we have them support us on a number of projects, right, that deal with just, everyday recurring items, right? So if it helps your business move forward, right, then yes, it's still money that you keep within the family. So it's not like it's going outside the family. So you're paying your kids. Most people will put that away for them or, 529 or something, right, else. So there's a lot of great opportunity for it. The one caveat, right, is I just will share with people is we don't do things to do things, right? Let's not complicate it or potentially raise red flags where we don't need to. And if you don't have the cash, there's no reason to try to move all these different things in this different way, right? Let's build out that infrastructure and then start moving towards what makes the most sense for where you're at.
But they have to be doing work.
They have to be doing work. You have to have a job description, responsibilities. You gotta kind of keep like time cards and things like that for them and stuff. Like and be consistent, right? I mean, it did as well too.
Do people be like, oh yeah, look, my 10-year-old, they're on the payroll, and you're like, yeah, that's not going to happen.
I mean, I've got two right now that do, right? They're in the position to do it, and I know them, right? So I can see the work that they do, right? And so that gives me confidence that they're in fact doing it. But I've had others where they're like, oh, we just, my 5-year-old's going to be in my, flyers, in advertising and these things. I'm going to write all that off, and it's like.
I mean, they're acting, lending their likeness. Yeah.
I mean, it's, I think I've grown to understand the rule better and, what potential concerns there might be, right? Because for me, a little bit apprehensive, right?
There's a risk analysis, right? Because ultimately it's going to be on them.
And it's also on us too, right? Because to some degree, I mean, we have to do our due diligence, right? Correct. We can't just go, got it. We have to go, did you, I can give you an example. We had a client come to us, small business, but I knew that they weren't. And the previous, tax preparer wrote off like this exorbitant amount of miles. And when I talk about exorbitant, I mean, like I did the math and it was like you had to drive 500 miles a day for 365 days.
They were going around the world in a car.
That's it. And so I'm like, look, if you're going to cheat, like at least be within the bounds. But those are examples where it's like, people aren't even, they don't even care, right? That they're not, one, it was on the tax preparer more than them, but they would go back to them. So have to, if they were denied the deduction, and the taxpayer would, be audited and also, run the risk of, jail time and fines and penalties.
Okay. So if my kid comes to me and says, Dad, I'm going to be your social media advisor, and the first thing you're going to do is create a video where you walk around saying 6'7".
That's it.
Mm-hmm. That's it? Yeah. All right. I can pay him for that. It's done. All right. So unique tips. Anything about selling like special kinds of properties, right? Like our members, they come into things. I mean, I remember somebody specialized in log cabins.
Yeah.
There's a bunch of different types of properties around us. Like, is there any other kinds of advice you'd give for that?
Well, so most of the advice today, again, at these levels, right, are going to be pretty standard, right?
Fair enough.
A lot of times people are like, well, what about I do this? What about this, right? And it's like, the rules are the rules, right, for everybody. Now, I did look this up from the last time I was here, right, because I wanted to come up with something unique. And so what I came up with was, if you're showing, lake properties, right, beach properties, right, there are boat expenses, right, that you can take. And
Because I gotta go on the water in order to see that.
You want to show the lakefront property from the lake view, right, or the beach, or just a number
How
of
far
things.
are you from the, like the dock,
the inlets and things like that, right?
That's fair. I mean, that's a part of the research.
Yeah, if you're entertaining, what does that look like from here, right? I mean, there's just so I was not shocked, but it was very unique, right? Because again, we're San Antonio, we're landlocked, we're not necessarily having LBJ or anything like that. So
I mean, Woodlawn Lake has some properties that are kind of there.
Well, and they got that new renovation coming, so maybe if you're in the Woodlawn Lake area, you got your boat.
There's
come
a few.
to me.
Yeah, there's a few. It's up and coming. Anything else that you research? That's fascinating that you're like, I'm coming up with something this time.
Yeah, I just wanted to come up with something, fun and unique. Or what. I didn't come up with anything else. That was kind of the one that I landed on.
That one's good. So, my last note was to ask you about new legislation. Yeah. The One Big Beautiful Bill Act. And there's a couple of things in there that they wanted us to see if you could help us expand on. One of them is qualified business income deductions made permanent and improved. Tell me about those.
Yeah, so this one came from the 2017 TCJA, right? And
TCJA, for those of us who
Tax Cuts and Jobs Act,
got it,
2017. And so a lot of those policies and provisions were sunsetting in 25, right? And so through SADC and others, right, we've all kind of gone down there and championed this. This was one of those that we championed. So the QBI is on the books as a 20% deduction of your adjusted gross income. And so it's a tax savings at the end of the day. It's a big tax savings for a lot of the independent contractors, realtors, small businesses, and whatnot.
How are they going to take advantage of it?
It's automatic.
Okay.
If they qualify for it, the system, whether you're using, something online, right, or you're working with somebody, right, the system's already going to, provide it for you, right? Provided that, again, you qualify per the rules on there. But
what does it take to qualify?
So there's specified business activities, right? There's some limitations there, right? Most people are going to qualify for it, right? Okay. So there's just a few limitations on some of those. So just to qualify that piece of it so that nobody feels...
And that was made permanent then?
Yeah, that was made permanent, right? So a good 20% over the top.
And the individual tax cuts extended as well permanently?
Yeah, the tax rates, right, that we had from that 2017, again, a lot of things that were sunsetting, right? So the tax rates that are in place, right, that got lowered, right? So there was a stair step on some of them, right? But those got, again, extended. The child tax credit, and then, of course, the higher standard deduction, right, was another one that got extended.
Now, I remember, it's all coming back to me now, 2017, did it make everything easier for y'all? Like, did it make everything easier for the independent contractor who's filling out their taxes? Or really it just made it easier for the person who had the W-2 and filed that way?
No, it did. I mean, it really did. I think when we think about the education side of it, right? If one more thing you have to remember is you've said multiple times, I'm not the accountant, right? Yeah. Like we don't want to make people the accountant, but we do want to educate them in the work that they do, right? So from that standpoint, it absolutely did. From, a standpoint of, simplifying, right, the return, sure, it makes it a little bit easier for the system to just generate your review, those kinds of, not to miss anything. It's not a convoluted calculation. One of the things, though, that I will kind of always poke on when it comes to the TCJA and the higher standard deduction was that it's a higher threshold to meet on the itemized side. And so the itemized side, right, is now granted homes have increased in interest and things, but interest and property taxes are your two largest deductions on the itemized side. Most people don't qualify for the medical, but the donations, charitable contributions, that was a big one, right? And a lot of people would tax plan to around get those. Over that. Mm-hmm. And so we lost a lot of individual funding because it wasn't an incentive, right? Now you just gave for the goodness of your heart. Now there is still a deduction on the books for, I think, up to $300 per person or something like that. But it's a lot smaller, right, than what it was when people were actually tax planning around.
Like if I gave $10,000 to a nonprofit,
yeah, it was like 12.5 or something. You had your, dependent deductions, right? So at 12.5, you might be already at, 12,000 and go, I want to give $1,000 to the church, or you might already be giving to the church, and now you get to take that, right, and be willing to give a little bit more, right, on other, contributions and things. So
okay, now estate taxes. Now this is, can you frame this one in the version of the agent who's helping the homeowner, right? Like, hey, here's what you want to do. Here's what you need to keep in mind for estate taxes, because maybe this is their final home, or they're selling the home and they're going to use some of the money. I don't know. Like, What's the important part about that one?
Yeah, I mean, it's this one more than anything else is I don't know if it's the realtor, right, that's going to assist in that. I think overall, as an individual taxpayer, you just have to understand, right, what your overall net worth is, right? And so they made permanent the $15 million deduction, right? So if you're worth $15 million, there's no estate tax for you. If you're worth more than $15 million, you're going to pay the difference in that tax, but there's also a lot of estate tax opportunities and things like that as well too, trust and stuff.
What does it mean to be worth $15 million?
I couldn't tell you. Yeah.
That's what I mean. I've always heard, like,
I wish I knew.
I'm worth $15 million. I'm worth $10 million. Like, what does that mean? Like, you own a house? Is it your 401k?
So
how much money you make? You're like, yes.
Yeah, it's a little bit of, I think it's a little bit of all that. I'll kind of put it back to, just to bring it back to San Antonio a little bit, right? And so if people might have seen, like, there was rule changes around Sabeta, right? And so one of the rule changes as well is that they put this income threshold, this wealth threshold on there, right? What you're worth. So it is. You take your value of your home and your mortgage. There's a value there. Your bank accounts, right? Your cars, right? All the personal assets, right, that you might have.
So like a company does, right?
Yeah.
Like my asset sheet.
Yeah, it's your balance sheet.
Okay.
Yeah, it's your balance sheet, right? So if you have savings, if you have stock, you have a retirement, all of those things you basically would add up. And again, there's also a lot of analysis of, like, what is your home truly worth, right? So they do planning around breaking that up as well. But if you added everything up, your home value now minus your mortgage and all those things, credit card debts and stuff, that's your net worth.
Okay. All right. 529 plan expansion, a little bit about that.
Yeah, so 529 has always been around education, right? Higher education, right? And so what they've done is they've expanded the definition to allow for expenses around, like right here, real estate licensing and other career training.
Okay. Tell me that in different words.
Yeah, so it was basically a savings account, right, to be able to use for qualified education expenses.
So I'm going to put $500 a year. Let's just say $100 a month. So at the end of the year, I have $1,200. Like, doing that over time, now they've expanded what I can use that for?
Correct.
Okay.
Yeah, before it'd have to go to like a university, a college, right? It's a qualified institution.
Okay. And that's for your children or for yourself?
It can be, I believe it can be for yourself as well.
So if I know I'm going to go get a master's degree, or I'm going to go get some other kind of certification, maybe, like, I can start putting that money away.
So I didn't read the entire definition. Like, I'm a CPA, right? Like, does that also qualify for CPA? That part I didn't.
But at least they should explore it.
Yeah, absolutely. Yeah.
Okay. This has been great information. What is the one thing, though, that you always want to make sure that your clients know when they're coming to you and it's tax season and they're coming up on the deadline? Aside from, please don't bring it a week before the deadline. Yeah.
Oh man. Honestly, it's really not a complicated thing. I think that, again, I've mentioned it, right? We have a lot of anxiety around it. I think if we properly plan and educate, we show up in a much better way and we get to reduce that anxiety. It's no longer kind of scratching a lottery card and hoping you win or you lose. So really just want to kind of remind people, right? No matter whoever you choose, make sure that they have really good infrastructure, right, in terms of systems and automations and workflows. Make sure they have the competency, and make sure that they're educating you and working with you, right?
You're talking about who you choose in an accountant.
Yeah, as a tax preparer, as an accountant, those things, because all of that factors into when you show up to tax time. Have we been prepared in having those conversations showing up? Now, a lot of people probably will go to some place where there happens to be a Lady Liberty hanging outside waving. What would you say is like the downfall of that, as opposed to, this is that threshold when you should probably go see to somebody who is more educated and sophisticated in these areas? Yeah, I think it just depends, right? I'd never want to say that there's, a competitor out there, right, that's not right for people. A lot of times people do. Yeah, I mean, if you have one W-2, I get it. Yeah, I mean, they do it out of convenience, transportation, right, technology. We have wonderful technology, right? And we've worked with, people that are a lot older. They feel like, I don't know technology. And we go, but you use your phone all the time. And we have an app, and they made it super easy. But we understand that there's limitations and restrictions. What I would say is that a lot of times it's building the relationship, right? That you may not get there because they do have a higher turnover. The level of technical competency as well, too, in terms of where we're planning. To your point, work at HEB all the time. That's what I'm going to do, not changing. You're not looking for the relationship. You're not looking for, technical expertise. You go to wherever it's convenient. That can still be us. But if you're having things move, if you're growing in your career, right, if you're starting businesses and doing those things, I think you really want to build a relationship with somebody.
Makes sense.
Yeah.
Okay. Robert, I greatly appreciate your time.
Sure.
I thank you for helping us to prepare for the end of the year, and hopefully all of our members will have a successful 2025 looking at 2026. Thank you very much.
Thank you.